Hi, let's talk about KemPharm. It's a specialty pharmaceutical company. Discovers and develops various proprietary prodrugs to treat serious medical conditions in the US, and also so they have the FDA already approved drug that is called HC stars, and the company utilizes its ligand activated therapy technology to general improving prodrugs version of FDA approved drugs, and as well to general prodrugs version of existing uh, compounds that may have applications for new diseases indications. So as we can see here, I use for biotech companies this biopharmaceuticalist.com site. So yeah, there's the drugs that are, so two of them are approved. One of them is on a phase 1 and the other one is on the phase 3. And the follow firm should not consider as investment, but the market cap of the company is already 263 million. The earnings are forecasted to grow 55% per year. Earnings grew by 11% per year over the past 5 years. So it's good stable company that is growing. But there's also risks: high volatile share price. Shareholders have been substantially diluted in the past year, and very serious situation as a negative shareholder equity. But anyway, the price went pretty much up since the latest earnings update, and we see here market performance. 1 year return currently 147%. Huge returns, of course, beat industry, beat the market. Long-term price volatility is the highest though. So based on industry, that is pretty low volatility, but this stock is on the highest. And also, yeah, valuation side, unfortunately, Simple Wall Street does not have any price target, but tip ranks do. Currently $10, and yeah, so pretty much the same as it is currently. But MarketWatch has the better price targets. So in good scenarios, $28 per share. In bad scenarios, still 10, and an average of $19. And as we can see here that by the way, this is not the like usual biotech company which has mid-February its peak, but it has in December. And yeah, so the price went then around $20, so highest point 22. Yeah, and if we see here for the earnings update, the stock price pumped, I think, mostly of that. So revenue is forecasted about 2 million, but the revenue actual size were 12 million. So huge improvement on the revenue, but EPS is forecasted to be minus 0.17, but they made actually less. So earnings per share is made at minus 0.54. So there's a kind of awkward because yeah, the revenue is going so much up, and I think investors believed, and they read this as a better news. But anyway, future growth hugely is forecasted, hugely, like over 55% annually, and earnings per share growth is forecasted as well. It's forecasted that they become profitable end of this year, and there's an EPS just this slightly above zero, so which is very good and very positive side of that. And yeah, past performance, anyway, they decreased the business, so there was earnings pretty down, minus 61 million, minus 50. It's currently like minus 12. Yeah, there's a minus 96 profit margin. Yeah, so basically that means that the company is currently unprofitable. On the financial health side, we see here, yeah, this is actually a very serious situation that equity were a long way on the negative side, which is very unlikely to see, but there's also like two times dramatizing this situation is that they have high level of depth, and yeah, we see here negative shareholder equity, which is more serious situation than the high level of debt. So they have both. Equity is minus 66 million and debt 68 million. So pretty sad to watch a balance sheet. Liabilities plus equity, whole red. So be careful, guys. Be careful with those kind of speculations, because never knows what happened on the stock market next. Anyway, ownership shows that there are buyers. So recent insider transactions last year, June, May, August, not as significant sums as you can see, $288, 6,000, mostly individuals holding this. And yeah, ownership breakdown. As I knew, general public hold mostly, and as you can see, those companies with huge depth, huge negative shareholder equity, mostly are holded by general public. So 78% here, institutions 11, insiders 10, and private companies 0.04%. Top shareholders. So there is not likely so much. So I see here, here's the BlackRock here, Vanguard is also here. There's a insider that increased the volume, and there's an individual. I'm not sure if it's insider, but the individual, yes. There's also co-founders here, which has decreased the stocks. Last reporting holding date 27th of April. Institutions brought, so two institutions brought the stock to their portfolio, and yeah, it's, as you can see, it's highly volatile share, and volume peak in 1 year 60 million was March 3rd. The stock price went then to the highest point of $18. So this might be continue to do ups and downs, so be careful. This current level, as we see here, it's pretty average on the same as we saw last year, November, October, September, and yeah, I think it might drop in bad scenarios and very bad scenarios to the less than $4 per share, and in good scenarios it could be reaching somewhere around $20 in very good scenarios. And yeah, we'll see what do they get the needed approval. So there's a pivotal trial planned to this drug, and also this drug, which is on a phase 1 clinical program to commence in 2021. Yeah, and they had approved in March 2nd. So that's basically what we saw here. They got it approved in March of 2nd, and then highest point $18 per share. Anyway, investing.com summing the stock for long-term investors as a strong sell, and we'll see here, volume is better now, maybe we will be millionaires. Sold at a loss, starting a small position in those. 590 million of pipeline, even better. Market cap is now. Wake up, people. November deal is made. Is about receive cash and not quite sure. So there's a lot of like traders comments there, but be careful, because we usually see like these kind of time frames. So in FinViz we should see this kind of frame, but if we open 5 years max size, so we see here that there were investors that have been buying at even $378 per share, currently minus 97%. And yeah, last year's May 99. So be careful. Try to avoid those stocks with negative shareholder equity, with a lot of volatility here. So mostly the stock would do, for example, buybacks and so on. It would be better. Yeah, if we open the simple safe dividends, we see here that shares outstanding made a fourfold, and yeah, total sales are only now. So they have only now the sales, and there's shares outstanding keeps just increasing very much. And I didn't say about the cash level that they have. Yeah, so the cash level is also decreasing, and currently it's based on last reporting 4 million. So that's the cash amount, is not even covering the depth. So be, guys, very careful when you invest. Try to invest long term. Try to first invest in some of the S&P 500 stocks, then try to, if your risk taking abilities allows you, then try to invest in something else, because even these stocks, for example, we see here AT&T decreased by 5.7% because of the announcement that they will cut the dividend pay of 50%. So, and they have payout ratio currently, I think last time when I saw it, it was something around 80 or 90%. So if you see something concerning, for example, I think this is a very serious situation. So if this continues, as we all know, the price will go up, down, sorry, because as we can see, the shares outstanding keep increasing. Whenever the shares outstanding increase, the mostly it lowers the price. Anyway, thanks for watching this video, subscribe the channel, like the video, and see you in the future one.